Okay, lads, we'll look at incomplete Type B records. I've been up for quite a while as a 100 marker. The last one to come up was E. Fuller, as 100 marker. There was one, I think 2017, there was a 60 mark question. That was a throw up, something interesting, which we'll talk about at the end. You had to work out the bank account, which you normally wouldn't have to do. Anyway, we'll come back to that point in the future. Just with the incomplete record type 2s, you'll see the layout is slightly different. They're given in point sections, and you're operating in the way I'm going to say because it asks you to do the balance sheet first. Okay, so that's what makes them different from the other video. Okay, but beyond that, a lot of the process is the same. Um, Now, our final answer, the final answer we'll get will be sales. Okay, so these questions always balance, and that makes them a little bit different as well. Okay, so how do we start off? E. Fuller purchase business for 400,000. So that's your capital. So we can just put that in. Then it's your finance by. Now, when he buys a business, it's going to be goodwill. So we'll work out our goodwill working. Again, that's not new. So you've got your premises. You've got what you paid for the business, which is 400,000, minus what it's worth. So it's worth its assets 292 plus the stock of 36. Plus debtors 32.2, plus 450 rates prepaid, plus equipment at 20,000, minus creditors of 35.7, minus wages due of 1,200, and investments are an asset, so 50,000 in there. So the business is worth 393,750. So we'll take them away, and you'll get a goodwill of 6,250. All right. So just like with your other types of incomplete records, just go back up to the top and start working through them. So our first one is premises. Now premises starts off at 292, and you'll buy a new premises during the year. So during the year he borrowed 120,000 together with 30,000 of his own funds was used to purchase an adjoining premises. So the new premises is 150. So the two dollars get added together to get 442. Now you'll notice I'm actually putting them in the first column this time because I've done this question so many times. I know there's depreciation in it, which there hadn't been in the other questions to that point, right? So look, it wouldn't be a huge issue. You go down and find it eventually. It was the second last working. It says Fuller decided to set up a provision for bad debts meant 3% of debtors and to charge depreciation at 15% on delivery vans, 10% of equipment. So there's nothing on the premises. He's also not revaluing or anything like that. But there's nothing to say he couldn't revalue in the question. Anyway, that's premises done. Opening stock 36,000. Next one we see is debtors 32.2. Now, in the type A questions, debtors are used to work out sales, but I told you that sales are the final answer in this, so we don't actually do anything with this debtors working. The next one we see is the rates prepaid. So that's like our insurance working from the type A, but the rates prepaid is 450. So we're going to add on that prepaid of 450 to our rates. I'll just make this a little bit bigger. There's no reason for it to be so small. Okay, so the rates anyway down here should be rates for 12 months are 7,000. We're going to add on that 450. Now that's 12 months. This year we're told it's 3 months, so therefore there's going to be 3 months prepaid at the end of the year. So we'll go 7,000, and we're going to find 3/12 of that. That's 1750. So our rates are 5,700, the expense, and the current asset is 1750. I'm going to put that in immediately because I forgot to put in the prepaid when I did the type A video. So the rates prepaid of 1750 can go in, and then your expense of rates is just make sure there's no drawings. There is drawings, so we have to take away the take away the drawings. So that was 20%. That's 1140. So that's 4560. Now again, I'm going to come back and do that drawings working right at the end, just for clarity's sake. So the rates as an expense then 4560 into your trading profit and loss account. Okay, that's rates done. And next one you see is equipment. Now you'll notice that I've got equipment highlighted in the question. This was new back in the day, but it's just a little bit like a question one working. So you've got equipment at 20,000, and then it tells us that he buys equipment for another 15,000. So in reality, it's 20 plus 15, which is 35. There was no trade in or anything like that, but what it does say is there's depreciation. So there's 10% depreciation on equipment held at the end of the year. So they're working on that. So I'll do it on my workings page. Depreciation of equipment. We had 10%. So we had 20,000, and that was for the first 6 months of the year. Then of course we had 10% of 35,000 for the remaining 6 months of the year. So the two added together then are 2750. Alright, so that's your depreciation. Now it's your accumulated depreciation as well. There's no other mention of depreciation at the top, so we'll put in our depreciation of equipment over into our expenses as well. So 2750. So that would have been new, but there's no trade in or anything like that, so it should be straightforward enough. Trade creditors 35.7. So a bit like I said about the debtors, the trade creditors and the type A's we used to work out purchases. Purchases is going to be one of our final answers over here, so we don't have to do anything with it. Wages due, we'll go with general expenses. Now I think I'll do working on this because there's a few little changes. So if we look, our wages and general expenses start off at 80,000. We've got this due at the start of the year of 1,200, which we'll obviously take away. And And then you see here it says the payment for wages for general expenses includes 3,000 petrol for Fuller's private use. That's a drawings. And they've sneakily put that in with the rest of the bank working, and they didn't put it with the drawings working. So they're really asking you to understand that if it's a private use, that it's that it is drawings. So obviously you would have got that. So 75.8 anyway is your expense. Okay, now again, I'll come back and do that drawings working later. 5% investments, 50,000. Okay, now they've told us what the investments are, therefore we're going to have investment income, which is 5% of 50,000, which is 2,500, and then we'll have investment income due. So anytime we have investment income, we'll have investment income due as well. So if we look to the question, we'll see that we've actually received 2,500, so there is no investment income due. So it's 2,500 minus 2,500, which is 0. So just leave it as 0, so as we know at least to check for that 2,500. Okay. During the year, he didn't keep a full set of accounts, but estimates the gross profit is 20% of sales. So that's going to be important when we come back to that at the end. Each week he takes stock to the value of 80 and cash 170. Now that's my drawings working, and I'm going to tie that in. We're working for. We'll do that at the end as well. So then, on the 1st of the 8th, 2008, Fuller borrows 120,000. So my loan initially is 120,000, and together with 30,000 of his own personal funds. So that's capital introduced. So that's your 150,000. He buys the premises. So it was agreed that the sum borrowed would be repaid in 20 equal half yearly installments. So that's two installments per year. The first installment is due in February. Now, that doesn't matter. It doesn't actually matter when it's due. What matters is that 2 installments fall due within 1 year of us doing our accounts. So we're doing our accounts from the 31st of December. So within 12 months of the 31st of December, we're going to make a payment in February, and we're going to make a payment in August. So 1/10 of the loan falls due within 1 year. So instead of it being falling due after 1 year, it's falling due within 1 year. So 12,000 of the loan falls due within 1 year. So we'll just take that 12,000 away from there, and you'll get 108,000. So that still adds up to 120,000. It's just that we split the payments. So some questions they'll pay them back all in one lump sum. This one you're not. The interest to be charged at 6% per annum to be paid monthly at the end of each month. So we can do the interest working. So that is so 6% of 120,000 gets the loan on the 1st of the 8th. So that's for 5 months this year. So that's 3,000, the loan interest. Now we go down and see if any of the loan interest is for the private section of the business, and also we'll see if we've paid any. So we've paid 2,000 of it. So the loan interest due. So we paid 2,000, which means we're still due to pay 1,000. Now, the other side of that is how much of it is to do with the private section of the business. 25% of it. So of the 3,000, we're paying 3,000 in total. of the 3,750, or 25% of it, is for the private section of the business. So the loan interest as an expense is only 2250 and 750 in the drawings. So we can put those numbers in. The loan interest is 2250 and loan interest due is 1000. Alright, that's that one finished. So during the year he lodges a grant of 6,000 and investment interest of 2.5. So the grant is capital introduced, so we'll add on another 6,000 to this. And the interest of 2.5 is just used to find out the interest due, which we worked out to be 0. So we're nearly there. Fuller made the following payments. So he's made the light and heat 7.5, so they'll be working with that. So we start off with our 7.5. We know there's nothing from the top, or we would have come across it already. But we check at the bottom. There's a stock of oil, which you obviously take away. So the stock of oil is 300. You're taking away your closing stocks. Check if there's any electricity due. There is. So the due is 460. So there's nothing else. There will be drawings, of course, but work them out in a second. So the drawings is 20%. So 20% of that is 1532, which is a bloody awkward number. So that'll give us 6128 as our expense. Okay. That interest payment was used to work out our loan interest due. The equipment we've done. So delivery vans is next. So delivery vans is 30,000. Now you bought the delivery vans on the 1st of the 9th, so that's going to be important if there's depreciation. And there's 15% depreciation for the year. So our delivery vans depreciation will be 15% of 30,000. You got them on the 1st of the 9th. So 9, 10, 11, 12. So by 4/12. Which is 1,500. So into your expenses and into your accumulated depreciation, we'll go that 1,500. Now that might have been off-putting the first time you've seen that, but I'm sure you all would have worked it out. It's not as if you haven't seen depreciation, especially simple depreciation like that in either club or service firms. Anyway, wages and general expenses we've done, rates we've done, and we've done this here, this €3,000 petrol bill for his own private use. So the drawings, we've done that. I'm just going to do my drawings working now, just to finish it off. So let me see the drawings working. We've got our stock of 80. So 80 a week, so 80 by 52. If your cash of 170. So then I can just work back up. We had our light and heat of 1532. We had our interest of 750. We had our petrol bill of 3,000, and then we had this rates payable, so 20% of the rates payable, which is very early on, so 1140. So hoping that's the ball. I'm sure if it goes wrong, I'll never know, of course. This will definitely balance. So that's 19422 as our drawings. So I'm going to put that in my balance sheet. Okay. Fuller decided to set up a bad debt provision, so we know that'll go with debtors. So of 3% of debtors, so debtors is 34,000. So 3% of that is minus 1020. Okay, I'm just gonna put these over here so it's quite clear what I'm doing there. Now, anytime you set up a bad debt provision, it's going from 0 to whatever you've set it up to be. So in this case, 1020. So the increase in bad debt provision goes there. So it's gone from 0 to 1020. So the increase in BDP is 1020 as well. We've done the depreciation, so then we're just getting these ones at the bottom. So we've got our stock, 20,500, and it's stock of oil. So included in the 20,500 was 300 stock of oil. So we've done a little bit of space here. So debtors we've got in. Creditors is 35,400. Bank overdraft is a liability of 5,400, and electricity due is a liability as well of 460. So all the stuff at the bottom going into your assets and liabilities there. So we're basically finished. Let me just put in my closing stock over here. So 20,200. So okay, so we finish out our balance sheet first. So we'll add up all of our assets. Now again, you should show the total for your fixed assets separately. Just to leave myself enough room. Add up your current assets. Add up your current liabilities. 54,260, and then take them away from each other. And then add that 970 on, and that'll give you your closing balance. Now, here's the exciting part, I suppose. So we just come down and we'll put in the capital employed. We'll put in the capital employed as 559,970. So to find our net profit, we're going to add back on our drawings as a minus, and then take away our other three, our capital and our capital introduced and our loan, away from this 559,970, and that will give us a net profit and this is our answer. Alright, so obviously 108 plus 400 plus 36 minus 1942 plus our net profit is the 559970. So working backwards, 559970 plus the drawings minus the loan and minus the capital and the capital introduced will give us our net profit. So it's 35,392. So just do that again. Your capital employed, add on your drawings, take away your other three finance buys will give you your profit. Okay, and we bring that gross or that profit. We bring that over to our trading profit and loss. So 35,392. Now, to that, we've got our expenses of 91,098. Sorry, 008. So I'm just going to get rid of this line here, make this a little bit clearer. So 35,392 is our profit. Our expenses 91,008. So some number minus 91,008 is 35,392. So what we're going to do is we're going to add that 91,008 to 35,392. That'll give you the number to take the 91,008 from. So you can check that 126,400 minus 91,008 is 35,392. Then some number plus 2,500 is 126,400. So the gross profit plus 25 is 126,400. So therefore 126,400 minus 25 gives you the gross profit. Okay, and we're just at the finishing point. It tells us that the gross profit gross profit is 20% of sales. So this 123,900 is 20% of sales. So if we go 123,900, divide that by 20 and multiply it by 100, that'll give you your sales. Now, a little bit of messing around here. Sales minus cost of sales is gross profit. So therefore sales minus gross profit has to be cost of sales. Okay, so now you've got your cost of sales of 495,600, and a bit like over here, to find our purchases, we're going to take that 495,600. We're going to add on the gross profit add on the closing stock of 2,200, and take away the opening stock of 30,000, because opening stock plus purchases minus closing stock is cost of sales. So if you work backwards, cost of sales plus closing stock minus opening stock must be purchases. That's 479,800. Okay, now what you are supposed to do is show that it is what it is before the drawing. So the drawings on the purchases is 4160. It's the stock drawings 4160. So we're going to add 4160 on, and that'll be 495,960. And then take away 4160. So just show it like that in brackets. That's you finished. Now you don't know you're right. I don't know if I'm right. I'm just assuming I'm right. We could check American scheme at some stage. Okay. Now what I would like to show you, if possible, is the 2017 one, because I think it was 2017. There was a normal incomplete record, but they instead of giving you the bank working, they asked you to work it out. So maybe it's not 2017. Let me just find it in my own papers. 2016. Um, yeah, it was 2016. So I think I actually have it up here. Yeah, 2016 here. So if you see here, instead of giving you the bank working then at the bottom, they tell us that during the year he made the lodgements to the bank account 145,600 and 4,200. And then he made the payments of these. Now, what you do with that, you do a T account, and you do it just the same way as you do in a incomplete A1. So you put your lodgements on the left, put your payments on the right, and balance it. But there's more than these two lodgements. There's the 145 and the 42. But you also have your loan 350, and you have your lodgements. So your lodgement of 560. All right. So I think I might just show you this, right? So let's just do a T account. So bear with me now for a second. Merge. So let's do our bank account. So if we just look to that, where are you? Sorry, I don't know where this bloody question has gone. So we've lodged 560. So that's your lodgement at the start of the year. Of that 560, we made payments for the business, which were that's not the right bloody question either. Hold on. Which were he bought a business for 490. Okay. So then, what else did we do? He had this loan of 350, and he bought a premises costing 295. So we put those in as well. So the loan of 350, and he bought a premises. I think I said it was 295. Okay. Then we could say, well, what else did he do? He's paying out 5,200 on the last day of each month. So his investments are going to be 5,200 by 10, 11, 12, so 3 months. So that's going to be 15,600. Okay. What else has he done? So he's lodged. So he's lodged 145 and 42. So and I think said that was for capital of some sort, dividends maybe or something like that. And he's lodged those, and then he's made all of these payments here. So he's paid light and heat, interest, wages, equipment, rates, and diesel. So I'm going to bear with me for a second. I'm going to take a picture of these on my phone. Don't have to keep going over and back, but it's all of these that we have to put in. So we've got our wages of 94,000, equipment of 16,000, the light and heat of 92, and then we had interest of 35, rates of 10.8, and college fees of 4.6. Okay, so alright, so that's where we're at with that. So I have no idea where I got the college fees from. It's not on my picture. I need interest, wages, equipment, rates. Sorry, it's not college fees, it's diesel. Sorry, it's the same bloody thing. Sorry. So diesel of 4.6. So what we do there, to find out how much we have in the bank, we're going to add up the left, and that's 105,900. And then to find the balance, we're going to take that and we're going to take away the stuff on the right. And that gives you your bank balance of 120,500. Let me just check the answer there. Give us 1 second. Okay, that's not the answer. Sorry lads, I left out something. I left out cash drawings. Okay, so we're taking 170 out. See, I wouldn't have included that cash drawings because I would have assumed it was out of the cash register, but the cash drawings is obviously out of the bank, so it's 170 by 52. It's 1 1. So your balance 1 1. Yeah, something like that anyway. Okay, so that's how we balance it, and that would be your bank balance. So it's a bit like, as I said, it's like your question one in your, or sorry, it's like your type A. If you're asked that way, there's a very good reason. You can read between the lines, and this is a very good reason I'm showing you that. Alright, anyway, that's our incomplete records, so you can ignore. That's just an extra thing for you from the other questions. question. The rest of it is as normal. If there's any issues, let me know. I'd certainly strongly suggest having a good look over incomplete records between now and February as a minimum. Okay, so that's that one done.